Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our first show of the week, Trader Talk in today's market. I'm your host, Kevin Horner. It is a frigid and chilly morning here in Denver, Colorado. I'm also joined today by my friend, Mr. Michael Bruskoff. Mike is out there on the East Coast, also in a frigid and snowy location. Mike, how you doing this morning, buddy?
Hey, Kevin. Good morning. How are you doing? A little chilly out here on the East Coast, but we're gonna make it. We're gonna make it.
I have every confidence that you will, Mike. It's obviously a big week this week. Reminder for everybody, got a lot of earnings on deck. Now, we've heard from a number of key companies in the major indices, but this week we're going to be hearing, Mike, from some of our largest well-known companies, your Apples, Microsofts, Meta, Tesla, among many others. So a lot happening. We're going to try and set the table for you all this week. Remember to be following us on X if you can. We're available there for you. I'm available as Kevin Horner CS, and we're joined by Brent Moores in the chat, and you can follow Brent there on X as well at Brent Moores CS. Brent, today we'll get to comments and questions that Mike and I are unable to get to. We're going to try to keep an eye on what's happening there in the chat, though, for you. Try to get your comments and questions into the discussion, so feel free to post for the duration of the show. Looks like many of us are dealing with cold temperatures and some snow. Let's see if we can warm things up. Let's get to our disclosures here, everyone. First, remember that our discussion is exclusively for your information and your education. We do not make recommendations here. What we do is discuss the broader markets and look at the sectors and industry groups. Additionally, remember that while we do this, we utilize technical analysis. And so our process is one that has us sharing insights and ideas, concepts of technical analysis as we review the areas of the market. But remember, not to base decisions only on technical analysis. We encourage you, of course, to utilize a multitude of factors, but not just technical analysis. Now, in terms of an agenda, it's pretty standard here. If you've been here before, we're going to follow a lot of the same stuff. We're going to hit the biggest indices, work our way down towards industry groups and sectors that are moving, try to set the table for the week, but also understand this is a little bit of a different market than we have seen heading into 2026. So when we get to looking at the sectors that are providing leadership, it does look a bit different. And if you've been watching the market this month, you've noticed it. So, Mike, how about we start out with what's happening here in the S&P 500? We've got the week finish middle of last week that tested our 50-day moving average, but we really corrected it pretty quickly. And I think the last 2 days as we've battled at the 20-day moving average, it's been a decent indication of bulls and bears still trying to figure out where we need to go from here.
Yeah, listen, Kevin, I think the market, given some of the conflicting news out there, has held up pretty tight, right? It's ignored a lot of the geopolitical stuff over the last few weeks and has really kind of, shown some resiliency. And I think what you showed, what you have on the chart right there in the S&P 500, the 50-day moving average acted, as we would like to say, acted as support, right? That's what, as technical analysts, what we look for things, hey, how do we get these clues of the market? Well, we would hope that a 50-day moving average acts as support sometimes. So right where your pencil is right now, you saw even how it broke down below there earlier, late, call that mid-November, where you started that trend line. Yeah. But we still kind of held it. So the uptrend is still in place. We didn't put in lower lows going right from where you were mid-November. You have 3 low points there, but they're all higher lows, and we continue to make higher highs. So while last week might have been, I'll say a bigger drop from, this time last Monday didn't seem like such a good time last month. I guess last Tuesday, we were off on Monday, but last Tuesday, first day of the trading week, didn't seem so great. We had that big sell-off, but we managed to, it was a mixed bag last week, but, 0.3%, one way or the other, S&P 500, NASDAQ, right? So I think we're holding up pretty well right now. We'll continue to see if we can keep charging up to all-time highs. And as you mentioned, big earnings week. I think I saw over 90 S&P 500 companies will be reporting earnings this week. So we'll probably get a good tail of the tape as this week goes on, Kevin.
Yeah, and I think the key factor here, Mike, is that we're going to be hearing from the groups that have kind of stunk so far. right? It's stunk in terms of relative performance. We've seen the leadership in the broader markets. It is directly tied to some of our more defensive groups. If we pull up my market watch, you're going to see it. I can sort it here based on year-to-date change, and our leadership is materials, energy, staples. There's three that are not technology very clearly, right? And where is tech on a year-to-date basis? Oh, we're down almost a full percent year-to-date. So there is clearly something underway, and we should make note of it. The S&P can continue to trend upward, though, because of that allocation, the way that it's developed, the way that it is invested. As you can see, something like the heat map here, everybody, as a reminder, when we take a look at the well, maybe it's not going to show it to me. There we go. You've got these big groups of tech and communications, for example, but you've also got a fair bit of exposure to the lower right corner here in your defensives, those healthcare staples, energy, utilities, materials, etc. So you're going to continue to see, as long as we carry those groups, Mike, a positive S&P 500, albeit not necessarily positive to the extent that we've seen over the last 3 years, for example.
No, I think well said there, Kevin. I think, we'll hit into the sectors in a couple of seconds, but, some of the sectors are giving me, the materials have been acting really well, XLE, as we, we'll take a look at in a few seconds. But one of the sectors, Kevin, take a look at XLT for a second. Before, I don't want to get us down a rabbit hole, but I think, I'm on about XLT.
Staples?
Staples, my apologies.
Yeah, that's okay. I just wanted to make sure I had you correct here. I'll throw that up for you. Yeah, big move here, right?
Yeah, I mean, one of the moves that I don't know what to say that I'm concerned, but it is quite a big move. When I was on about a month ago, right before the new year started, me and you were on here the week of Christmas to New Year's, we were talking about it like they were, they weren't doing anything. It looks like they were heading towards new lows, making lower lows. And now all of a sudden, we're pushing on all-time highs. So is there a change in the market? Because I'm having a little, internal conflict myself with saying, hey, why are we seeing all these things? The market itself is hitting all-time highs, and the change in leadership is not the ones that we would really be jumping up and down about as far as leadership for the market to make all-time highs.
Totally agree with that, Mike, and yet it doesn't mean we cannot have a positive S&P year, right? We can have an up year that would be a little more standard. I'll remind you all, the average annual S&P return, broad market return, is between 8 and 9% on average annually over, 100 plus years, Mike. We've just been the benefactors of a ridiculous bull market opportunity these last 3 years, and 25% is not consistently on the table, or at least we shouldn't necessarily be expecting it to be on the table for us. So just be aware of that, is the way I kind of might lead that or leave us with it. I'm going to jump over to the NASDAQ here, but I wanted to answer one question about the quotes page. My columns in here used to be scripted columns, but these year-to-date change, 5-day change, 20-day, 6-month, guys, these are all newly available columns for you here, percent change since. And then once you've loaded it over on the side, you see I've got 4 of them loaded. Well, you just use this little caret, the drop-down caret, to select your time frame. Okay, so there's year-to-date, 5-day, 20-day, 6-month, etc. Check them out, and then make sure you save them as an actual group. Give it a name, easy to locate, and then you can always keep that active and available for you. All right, so check that out if you need. Not really needing to share a script, because we all have access to the same thing. Now, Mike, let's talk about what's going on here with the NDX, the NASDAQ 100. I can't get away from that red line, Mike. That's the one that seems to be most important for us in the near term. What say you?
Yeah, Kevin, I think, as you have it drawn right there, listen, you pointed out a few minutes ago, XLK, the big guys of the market. Listen, they're doing okay, but they're not leading the market, right? And that's what you're seeing right here as you look at the NASDAQ. Consistent amount of resistance at that, what are you calling that? 20, 25, a little less than 26,000 right there. You're trying to push through. It doesn't mean anything. I don't know that it's an ominous sign that we can't hit all-time new highs. We can be working off that tremendous overbought rally that we had last year, and now we're just kind of churning our way through. We still haven't made lower lows, as you have drawn right there. Call that an ascending triangle, right, where we've been trending up. The previous trend was up. We've kind of flattened out here at the top, but we're not making lower lows. And we're continuing, I don't want to say we're continuing to make highs. That wouldn't be correct. But we're giving it an opportunity. So I think this week will be a telling tale of what this graph looks like over the next couple of weeks, meaning we start to get some, earnings from Apple. We've got Tesla this week. We've got Meta, got Microsoft. We've got some of the big boys out there. So I do think maybe we can get a more definitive trend. We kind of looks like this one is looking for a change. And usually as you start to make a triangular pattern in the market of those higher lows and matching highs, we can get to a spot where we maybe get a bigger outsized move. Whether it's to the upside or downside, Kevin, that's still to be determined. But usually this pattern kind of points to that kind of move.
Yeah, I tend to agree. And yet, as a reminder to all our viewers who might still be figuring technical analysis out a little bit, it doesn't tell us what's going to happen next, but it does allow us to properly set risk. And, there's some key components here, Mike, you spoke to it. We still have lower highs, or higher lows, pardon me, right? We had a higher low here with the low we just made last week, which was higher than this low, which was higher than this low. So we still have what appears to be an ascending triangle. No, we've not broken through the red line with any conviction, but if and when we do, it's going to then allow the bullish traders to set their risk somewhere below that red line as a way of saying, all right, as long as we maintain this new level of achieved price action, we can continue higher, or we have a better opportunity for higher prices thereafter, maybe a higher likelihood of higher prices thereafter. But until then, traders might be a little bit patient, might sit on their hands a little here. But as we've spoken, Mike, about the relationships in these groups, the NASDAQ is essentially technology, almost exclusively NASDAQ 100 in particular, almost exclusively NASDAQ, technology specifically. So you're going to see this lagging just a little bit relative to the groups that we don't have in the NASDAQ 100. So, okay. Mike, let's see how our small caps are doing. Last Friday's move on the small caps was a bit of a heads up, is what I was thinking here. So the question is it, because it looked to me like I call that a gravestone doji, basically. We had a big, essentially Friday's action was opened below the low of our highest day in the rally, and then we just had a full-on red candle, basically selling down the entire day, Mike. The question now is it just that? Was it profit taking? And did we just now find support along the 10-day moving average, for example? Because it sure seems like we tagged it. The question is whether we're going to hold it now, right?
Yeah, listen, one of the better performing, parts of the market right now, the Russell 2000 for this year, right? Calendar year 2026, all of 26 days old, Kevin, right? So it had a little bit of a run up. That red candle, does it surprise me on Friday? I don't know that it surprises me. And I think if you kind of add some, you have a 10-day moving average on. I think if you can kind of open up that picture, maybe put on maybe your 20. Again, I think we have some room for maybe a little bit of a pullback without necessarily breaking the trend. Do you know what I mean, Kevin? So we still have those, like you said, those higher lows in place. I think that gives us some opportunity. Yeah, work off a little bit of an overbought condition. Doesn't mean anything's wrong with the Russell 2000, and then maybe it can then gather some more steam going forward. We will see later on this week how tied the small caps are to the interest rates, right? I don't think we're going to, we didn't hit on it yet, but we've got we've got a Fed funds meeting on Wednesday. Market to CME is predicting pretty much a no move right now, right? We're not really seeing much of a move in interest rates for this week. So I think that will continue to hold steady for the Russell 2000, Kevin.
Okay, so what it looks like we've done is weathered a storm as we broke through 4.2 on the 10-year yield here, which I've been calling out as a very important level. And then the moment it happens, the Russell 2000 made a new short-term high, or made a new all-time high, as it turns out. So what the heck do I know? But we've pulled back right to the 4.2. And so the question becomes, is all of this action over basically the 50-day moving average in yield here, Mike, is it telling us that we maybe do, in fact, have to digest higher rates? That's a possibility, even regardless of how traders are positioning per that CME Fed tool. You're right. They're positioning for 2 cuts between now and the end of the year. But most of those cuts, Mike, are positioned as of like summer and beyond. So basically, the traders are suggesting no cuts between now and about June in terms of where they're placing their money.
Yeah, Kevin, I think that makes perfect sense, right? I think the markets, and I'm dating the age of the two guys that are on this show right now, me and you. So since the year 2000, if you've been a portfolio manager, you've been really used to low interest rates minus since 2020, right? You've been used to that. That's been the norm. And you just said it a few seconds ago, hey, the market's going to have to deal with higher rates. No, the market didn't say rates were going up. It just said that rates might not be going down. And we might be at an equilibrium of rates, right now, currently what, 3.5, 3 3/4. We just might be at an equilibrium. And the market might be digesting that and say, hey, we're not going to have free money. Kevin, I'm not going to give you zero interest rates. But at the same time, Kevin, I don't see inflationary pressures that I have to continue to raise interest rates. So it's just kind of this area where, Kevin, maybe we're done with this cycle. Maybe the rate lowering cycle is over. Maybe, I'm not saying it is, and maybe we just might have to look at it. Nobody's saying, hey, interest rates are going up. So I think that's why you're seeing this tug and pull with the 10-year right now, because it's just kind of getting into a spot where we haven't had, a plateau rate 3.5, 3 3/4 go on for a year and a half, and quite a long time. So I think that's the market's pushing, pulling right there, Kevin. That's my opinion.
That makes sense, Mike. I guess we're going to continue to monitor it, but if I was to take our discussion just one step further from the look at yields, yields pulling back, and here we have utilities up today, and we have real estate up today. Let's get my standards back in there. So we've held some of these levels. I feel like the movement in utilities is kind of notable. We had that downtrend, new lows, but a bullish divergence in RSI. Looks like the 200-day has provided some support for utilities. And then you could say something similar about the REITs here, although the REITs themselves are still quite sideways. And if you're looking for reasons to be considering REITs, it might be tied to the idea that you believe yields are dropping or potentially going lower. But if you're talking about it from a trend standpoint, we don't have much of anything but a sideways trend now for about the last 9 months as it relates to real estate. So wanted to touch on just those two in particular, since they are so tied to the yield discussion. Mike, let's talk about the semis here. A little flat this morning, but Mike, this is not a bearish group. I mean, yes, technology is under pressure, but evidently it's not semiconductors.
Kevin called that the fuel of the technology world, right? The semiconductors have just, even for guys like you and I who love the market, this has been a tremendous move. It's been a tremendous move. And the one thing I think we can really tell our clients, maybe just don't fight the trend. When we say the trend, if the trend is going up and they want to keep going up, and maybe, and I'll be honest, maybe on some of these stocks in the stocks group, maybe I think personally, maybe I thought they were overdone. So should I go out there and short the market, or should I kind of maybe find another sector if I don't believe in it, right? Meaning, I think this overbought condition that we're seeing in the stocks right now, maybe it's not my trade, but it doesn't mean that I should, hey, let's go in there and just short it because I think it shouldn't go any higher. These stocks have had room to run. This is a worldwide market, and some of these stocks, I don't want to say have been really depressed. I don't know that would be the right term, but there's just really no selling pressure coming out. Nobody's putting out a block of 1 million shares to sell. So it's supply and demand. If nobody's willing to sell them, then they're going to continue to keep going up. The one thing that I would say as I continue to look at these semiconductors, and Kevin, I just lost my thought on what I was going to tell you. I had a great idea about them. It'll come to me in a second. But yeah, as I do look at these, I see a little bit of an overbought condition right now. You know, even look at your RSI down there. We're not in overbought yet.
Right.
We didn't even get above 80, right? The RSI. So we're hitting a new high. And the RSI still is telling us that we have room to run in these. So, yeah, these stocks have been have a lot of momentum behind them. That would be the correct term, Kevin. There's a lot of momentum behind them right now, and there's no reason for me, if I don't want to participate in them, just don't take the opposite side. I think that would be one of the things I would say.
I like the sound of that, Mike. And again, when you said obviously the don't fight what you're seeing scenario, really hard for us traders. You know, we hear the narratives, we read the headlines. If we watch the market Monday through Friday, we're getting a lot of noise as compared to, for example, a standard basic trend, which is easier to see, easier to monitor and manage, working with, for example, the weekly charts as opposed to the daily charts. But that doesn't mean it's easy to do it nonetheless. When you look at the way the semis look here on the weekly, you know, again, I take you back. You've heard me say it, everybody. I take you back to May when we recaptured the 20-week moving average in green. We've been above it. You've had no reason, if you are utilizing the 20-week moving average since May as your support test, you've not had any reason for a sell on weakness as it relates to the semiconductor space. Now, it doesn't mean you can't be selling into strength, obviously, but if you're a trend trader who chooses to reduce position size, reduce risk, when the breakdown occurs, you haven't had it in the semiconductors. Now, taking that knowledge of how technology and how important tech is, how important semis are, I wanted to expand before we go look at, well, actually, let's jump off of this. Let's look at technology collectively first, and then I'm going to drill in once more. Mike, this has been a struggle, but we're not making lower lows. We made matching lows. So this stands out. It is a difference between relative strength and outperformance in a space versus a bearish trend. This is not a bearish trend, Mike. This is a pullback with matching lows over the last 4 months or so. But Mike, I say it all the time. If we're trend traders, matching lows are cool. Lower lows are not. So first of all, speak to what you're seeing here in tech. I know we've been kind of dancing around it this morning.
No, we've been dancing around it, but I think you're right on target right there, right? Where you are right now, let's just put it this way. This is a big week, right? This is there's not much, if you drew a triangle, which is essentially what you're drawing right there, you're almost at the apex. You're 75% of the way through a triangle. So from a technical analysis point of view, 75% through a triangular pattern, and in this case, it's a flat triangle, right? You got those lower highs, and you've got those matching lows.
Yep.
You can see that, you know, we're kind of at that spot. As we've mentioned, we have a huge, earnings week coming up. So I think the tail, pardon the term, the tail of the tape will kind of come out for these guys as this week goes on, right? Mm-hmm. So I do think we're going to get some kind of move. I don't know which way it would be. But if you kind of believe the market, it's been trending lower. And, if you look over the course, if you open this up to a 3-year chart, this has been an unbelievable 3-year chart, right? So if you look at it, so could we be getting a little bit of a nosebleed up here? Could we say, hey, maybe there could be a little bit of a downturn? Even if there was, right? You're at your 4-week moving. You're on a weekly chart, right, Kevin?
Yes, I am.
No, you move back to the daily.
This is the week. This is the weekly, and we are right beneath the 20-week here, right beneath it.
Yeah, so right below the 20-week. What's that? Your 40-week right there below that, which would equal your 200-day. So you have some room below, even if we broke your green support line, that these things would completely fall apart. It might actually end up, if they did, if you hadn't gotten a chance to get into them, it would be your buying opportunity if they came down to support at that 200-week moving average, right? So there's always an opportunity out there, right now, yeah, they look a little. I don't want to even say they look shaky. They just look like they're in a consolidation pattern. I don't know. I don't want to be negative on them because there's really no need to be negative. I do think, again, when we look at the 4-year chart, they're working off a little bit of that overbought condition. That's all. Change of leadership, as you pointed out.
Yeah, change of leadership and relative strength, but not necessarily a change in the broad trend. And again, this still looks like a pretty decent uptrend to me. Yes, we're below the 20-week, and if you're 2 weeks below it, that might be sufficient for some traders to call that weakness of reasoning for lightening up positions and whatnot. But I think where we are will help us out, right? Because we are at a major point of inflection here, Mike. You've got the 20, the 50 right on top of each other, the downtrend line running into that same price. So basically 56, what is this, 56.60 on the IT space here, utilizing this symbol. That's a pretty important level to get through, and it'll tell us quite a bit if we get cleanly through it. Maybe the earnings carry us and we move cleanly through it on tech, or maybe the earnings struggle and we get beaten back here and we do make a short-term lower low. That's also a possibility. But if you're trading what's going on within the white line and the green line, you don't have much reason to take action until we get outside of those lines. That'll help you out. Now, we've seen the semis providing leadership, but Mike, it's not across the board, obviously. Check out what's happened in software here. Software has been the dog in this space. We're down pretty aggressively. If I drew my line to instead of where we are, how about where we were, our low? We've had a 21% pullback in software, so that is not insignificant, Mike. And more notable is the fact that we've broken down and failed at resistance now twice. The big one was here when we took out the neckline of what appeared to be a double top. Right here, we made a move made a lower low, bounced right back into the neckline and continued our downtrend. So we're at a precarious spot in software here, Mike, because we've done the exact same thing here that we did back here. Now, it might need a little more time, but the concern is that any bounce is simply going to give us a lower high yet again. What are you watching on software?
Yeah, Kevin, I obviously we'll have a big week this week with Microsoft in it, but if I call that a double top, right? And some of the technical rules of technical analysis, what is that height between those two spots? You got it pretty much pegged between 96 and 86, right? So if I use that you're drawing there right now, it's going to put us right around down about 77,000, somewhere around there. We tested it, and then we kind of bounced back up. So maybe we're kind of finding a home right here. You have the RSI, as you can see, has been weakening. And even with that low, it hit an extreme and kind of bounced us back above, gave us a little bit of a buy signal on the RSI when we crossed back above 30 sometime last week. So as I look at that, I don't know that that's something I'm jumping into. I don't like being below the 20-day, below the 50-day. You have a death cross kind of going on in there. And again, a death cross is defined as that purple line, your 50-day moving average, negatively coming from above, crossing below the blue upward trending blue line. So is that, does that make me, oh my God, Kevin, I can't stand these stocks because there's a death cross? No. But if you look at it, about May of last year, you had the same sign, and maybe a little bit, maybe closer to June, where the purple line crossed positively above the blue line. So from a technical perspective, probably not the best technicals for the software stocks. That doesn't mean they're dogs. I would tell people to do their homework on the fundamentals of those companies, as you pointed out earlier. But
Sure.
From a technical side, I do think we could probably find some things that look a little bit stronger in the market.
I think that's fair to suggest, Mike. Given what we've seen, 20% plus pullback here in a significant group. If you're looking for reasons, now there's a difference here. We don't encourage you to look for reasons to be a buyer into a group that's oversold or maybe in a downtrend. But if you're a longer term viewpoint and you're wondering about it, we just tested the 100-week moving average with last week. So this could be a significant level. All right. And if you're further wondering, hey, is this level going to hold? Well, we can apply our standard technical analysis detail here, can't we? This is a weekly look, but it can still be valid. And if this candle that we made last week is the low in this drawdown from the peak, well, then the key factor will be this candle this week. Can we this week close above last week's high? Can we get a hold move above last week's high in this space? And then maybe this is an opportunity for a bounce for some traders, right? 20% drawdown is commonly an area where some longer term investors will look to deploy money. So that could be an opportunity there, something to keep in mind, depending on your time frame. Obviously, we all know time frame matters quite a bit. Okay, Mike, let's talk about the energy trade, which has managed to break out. We took out our diagonal downtrend line here a few weeks ago, and it's been rising. I love it when some of those standard concepts of technical analysis play out in the wild. Number one here in this case, Mike, it was the break of a downtrend line that was significant, lengthy in time, and we broke it and we've started to trend thereafter. And even the 20-day moving average is insufficient to manage trend here now. It's got to be the 10-day right now.
Well, Kevin, I think, this is what we, as a technical analyst, you kind of look for, the move, right? Hey, I'm going to study, and then give me a day when it makes the move, right? And,
yep.
And as it broke your trend line, that was the move, right? It broke out to the upside. And, I always use football analogies. If you're at your own 10-yard line and all of a sudden you're the running back and the defense is coming in on you, and you can get past that last cornerback when you're at your own 10-yard line on a running play, you got a lot of field to run in. And that's kind of what you just saw. As soon as it broke out, now you're pushing, I'll call them short-term, intermediate highs on the chart, right, for the chart that we're showing. But this is a good move, right? This was a really nice move. We like to see those things. Energy had been depressed over, pretty much for a little while right now. Energy has been one of the lagging sectors. And as we talked about, I don't want to call it change of, we'll call it change of leadership. I don't know if the energy is leading the market, but it's certainly, I'll call it a welcome change. Right? As we were just picking on the software stocks and, some of the stocks, it does make you feel a little bit better that there's other stocks out there in the market, broader breadth of the market out there. As you're talking about energy, we do have some big ones later on this week. We've got ExxonMobil. We've got Chevron on Friday morning. So keep an eye on this sector. Keep an eye on the price of oil. Seems like there might be a little bit of movement going on out there.
Yeah, a little bit. The price of oil, the move in oil has been notable, but Mike, it seems like we may have found some resistance here, rallied into the $62 a barrel level, the 200-day moving average. A little bit of improvement in here if you're talking about it from the standpoint of the broken downtrend line. Applying standard technical analysis, holding the 20-day, holding the 50-day, you could certainly see traders setting their risk here, utilizing, feeling bullish as long as 58 is maintained in the price per barrel, and feeling more bullish if you can work through 62. Now, a break back below 58, things get a little bit changes the sculpt of the energy space, I would suggest. But for now, not a whole lot to change here. And of course, remember, we're just looking at the price of oil based on the future quote here. We're not trading it. And if you are interested in trading futures, make sure you go through your requisite, everybody. They are certainly not appropriate for all of us as investors and traders, but make sure you go through your paces if you are interested in stepping into futures. Mike, let's talk quickly about materials, and then I want to get to some stocks in the news. I mean, Mike, again, trading what you see, not necessarily what you want. I mean, if you've been a trader in tech, you've had a hard time probably moving into something that tends to be a little slower, like energy or materials. And yet, Mike, they are providing leadership short term for us here. Again, can't fight against the trend, right?
Is it FOMO?
Maybe.
FOMO, right?
Yeah.
Fear of missing out, right? Listen, these things have had a tremendous move. Like you said, they're usually more of the slower paced runner like myself, Kevin. They don't really make too much of a big move one way or the other. But all of a sudden, the silver trade, right? The gold trade. So Is it a little bit of the economy? Is it, we'll talk about USAR in 2 seconds, I'm sure. I'm sure you'll talk about that in 2 seconds. But yeah, is it the economy that's causing all this? Is it unrest, in the political scheme? Who knows? Is it, from the president, we're interested in material stocks right now. You're hearing that from the government. The government's taking some positions in some stocks. So it is interesting out there right now. But again, Kevin, we have been talking for years about the same old leadership in the market. And so we shouldn't be surprised one day when the market actually gives us something different to kind of look at. Then we're like, no, we don't like that. Go back to the same stocks that have been going up. So, no, I'm happy to see a change of leadership out there. I'm not saying that these are the leaders. They are a little overbought. Look at your RSI on the bottom down there. We are in an overbought spot right there. So what could we expect? Maybe a little bit of a pullback. And I think, your 20 days probably a little far. You'll egg on to your 10-day over there. And I think that's probably the correct spot to kind of an idea. Take a look at.
And again, it's not to suggest that I know what's going to work as support, but it is to suggest that what's working will work until it doesn't. And one way to think about it would be a close below the 10-day would be the kind of weakness where a trader would say, all right, I'm now comfortable taking a little off. Let the dust settle. Let's see what goes forward from there. Let's push back to quickly hitting up. Just a quick look at gold, seeing that gold is continuing to do what it's doing. That's another new move to the upside. We're not going to need to talk about it a whole lot, but again, don't fight against it. That's parabolic all of a sudden. And then silver with a similar move, and my goodness, they just keep pushing. So perhaps through pauses, might need to allow some settling in, the building out of bull flags, ideally, right, where you just go sideways in price for 2, 3, 4 sessions and allow that new buyers to maybe step in. But yeah, perhaps a little bit of FOMO going on here in this space eventually, finally here. Mike, I wanted to get to some stocks in the news. We have some of these companies reporting this week. One of them is a little small company known as Meta. Now, they were upgraded at Rothschild & Company, Redburn today. They were upgraded to buy from neutral with a new target at 900, up from 740. Of course, price targets, never a guarantee to be achieved. But, Mike, I find it interesting that they would do so ahead of this week's important report.
Yeah, as an analyst, you want to get your name out there and put a spot, right? I don't like to call it bet because that's not the right term. But, yeah, I'm going to stake my claim, Kevin. I'm going to put my name out there right now. If I'm right, I look like a hero. If I'm wrong, I'm just another guy out there, right? So I can understand that. Listen, what gives you promise there, right? From a technical perspective, without getting into the fundamentals of what Meta does all day long, if you kind of look, can we break out into that above that red line? You hit it over your 200-day moving average. So you're trying to break above the 200, which is flattening. I do think for 200-day moving averages, sometimes it takes a little bit of both, not only technicals, but it does take that fundamental. It takes the story from the company where we've been trading below it since early mid-October.
Yep, late
and
October.
Now what's going to push this stock above the 200-day moving average, right? So sometimes it is that earnings, right? The earnings come out, these were great. We beat by XYZ per share. And then the technicals kind of start to take over from that spot. So right now, technicals are telling me, hey, I'm running into resistance and I'm stuck between the 50-day and the 200. And that's okay. And, let's wait for that fundamental story to come out. If that analyst is right this week, he looks like a hero. If not, stock kind of continues probably to move sideways one way or the other.
Yeah, perhaps. If nothing else, once more, technical analysis can give you the trade, right? And Mike, if we get rejected up here at the 200 today or the red line, then traders might expect it to get to the bottom of the trend that we've been in basically since October, right? So you've got all November, December, and basically January, 3 months in this consolidative period here. And if we can trade above it, some traders would just say, all right, we'll just draw the line right down here. And how much higher can we go if we get a close over the red line or above the 200 day? Well, we just take that line and add it to the red line, and now we've got a potential target for the move. And what a shock. It's at the last high, Mike. We can't really suggest that that's out of context, right? That falls in line with how a technician might look at this. So that gives you something for consideration. But at least right now, you don't have a trade per se, because simply put, we are right at resistance and your risk reward is inverted here. So that doesn't necessarily make a lot of sense. Now, I wanted to hit on another one in the technology area here. Needham upgrading AppLovin. The thing I noted here, Mike, was the level to which this thing has retreated. Another one where we've had gone to some pretty good ledges above resistance, but down here we basically filled this entire gap move, and today we have a potential to hold, with yet Friday being the potential low. So Needham upgraded AppLovin to buy from hold with a target at $700. They're stating that their e-commerce work has given it added confidence in the trajectory of AppLovin's e-commerce revenue growth for 2026 specifically. So, Mike, from a risk-reward standpoint, the bulls seem to have that opportunity right here if this is going to run back to the top of the channel.
Or the bears have it for the same pattern, right? Right? So as I look at it, listen, I think it's kind of critical that it holds this level right here. Let's put it this way. If I was a bull, I'd be I'd really hope that it can hold A, this low, and B, the 200-day moving average. Because I think the exact opposite would happen. If it kind of breaks down below this 200 right now, I would probably go with that high of 745, this current level right around now where we're trading. What are we, 545 right now? That's about 200 points. Yeah. If we were to break down below that, that's 200 in the other direction, right? So I would be a little concerned about that. This thing has had such a run up that's something to keep an eye on. Again, and you can see, look at the big gap below on your weekly chart. So this is a weekly chart. That's 40 weeks. There's 5 days in a week. That's about where your 200-day moving average is. There would be a big gap down if it were to kind of break that spot. And you could see very quickly how it could get down, break down below towards your white line down there. So for me, I'm not bearish. I would keep a critical eye on that to make sure we can hold and continue to hold those support levels. RSI a little oversold makes me feel a little bit better though.
I appreciate that, Mike. Listen, nobody wants to sit here and listen to you and me saying the same thing and patting each other on the back. I love a little back and forth where we have a little bit of disagreement. Nothing wrong with that at all. I did want to get one more that didn't make it on my list today, but happened in my pre-work. It's CoreWeave. CoreWeave today is getting an investment from NVIDIA, and it is popping to the upside, up 12% here. Let me just double check on this. Yeah, jumping after NVIDIA expands their collaboration. An additional, let me see if I can get the actual detail here, invested $2 billion in CoreWeave common stock at a purchase of $87.20 as part of their broader partnership. The investment is said to reflect NVIDIA's confidence in CoreWeave's business, team, and growth strategy as a cloud platform. And Mike, the trend here has been a bit of a struggle for CoreWeave. We just got access to the 200-day moving average, as you can see, and we were through the 200-day because this has only been around for 220 days now or something like that. So we finally have a 200-day moving average to eyeball, but pretty important spot if you can get through it, the confluence of the downtrend line and the 200-day moving average.
Yeah, I think you said it well said right there. I think partnering up, cash from NVIDIA certainly helps the company out right there. But I think for me, sometimes I have a hard time with stocks with less than the 200-day moving average. It's just for me personally, right? Sometimes I have a hard time because you don't really know what a trend is, right? All right, we've had a trend of 50 days, we've had a trend of 20 days. You kind of have to take it with a grain of salt. But from this chart pattern, I wouldn't even say we're in the safety spot yet. Even with the 12% move today, 13% right now. Probably would be a little bit better if I could start to see it. In this case, get back above its 200-day moving average, which you can see right there. It's just barely still below it right now.
Yep. But it's right there. So
it's right there. It's right there.
Development trend lines are just that. That's an art, not a science, and very rare is it that you're going to peg it to the level. But if nothing else, it's been an improvement in the price action. The fact that we've recaptured the 20-day moving average, held it for the last week and a half, gentle upslope there, but the 20 above the 50. It's at least giving traders a way to manage their risk. It might be a little overdone short term, but again, monitoring what we've seen of late, monitoring those downtrend lines can be very, very helpful as the initial potential entry for new trades. It's worked historically. It will work. It'll also you'll find instances where it won't work. Trust me. But nonetheless, we have to approach our opportunities the kind of a consistent way. That consistency is where traders generally benefit over the longer haul. So, guys, we're going to have to wrap it up there on this Monday, this chilly, frigid Monday in much of the country. Mike, I'm glad we were able to get you. I'm glad you were able to be on with us today, even though the weather has kind of stunk, but really appreciated your insights today. Thanks for being here.
Thank you for having me, Kevin. Wish everybody a great week.
That's right. It's going to be a busy one, y'all. Keep it tuned right here to the YouTube coaching channel we call Trader Talks. Remember to follow Kevin and Brent on X. Hit that thumbs up button down below for us. We're, of course, going to get this archived and ready for review here shortly, but we greatly appreciate the attendance and viewership, everyone. Thanks for being here. Have a fantastic week. We look forward to catching up with you again real soon.